Okay, Sherman here, and today is the 21st of October, and let's go look at the markets and see what we can find out. Right, we're looking for the market bias, as as we always do. Market bias is important, so let's go look at it's the agent session. So let's go look at something Aussie, something Oz. One, two, three, four. Okay, so Oz has gone up to here, to around 0.75. Okay, the trade suggestions says Aussie is currently strong, right? Let me see how much it has pushed. Just draw some arrows. It is pretty strong. It's like an ABCD, somewhere there. Preferably, right? If you're looking at the low hanging fruit, all right, the bias that you want is actually to the downside. It will make the trade easier. Make the trade easier. And you do want strength on the DEX. I do want strength on the DEX. I'll come to that later, but preferably we want the low hanging fruit. All right, let's go daily. 1, 2, 3, 4, 5. So right now the Aussie dollars is a buy suggestion, but I'm not taking this buy because I'm looking for this trade suggestion to become a sell. So today is already Thursday, so this move is not going to happen. If there's going to be a downside, which is a bias that I'm looking for, it will not happen um, until next week. So we're not really going to have that. So time box will not be with us. Okay. So anyway, you're not going to want to sell this yet because we're not about picking the tops and bottoms, right? So you cannot really sell this, right? Not yet. You don't want to pick this top, not yet. So what you should do is, a few things you can do is wait for the Aussie dollar to switch to the sell. That means next week you see a sell. Like when this is coming down, this will be a sell. Then you can then we can start looking at sell. Another way, of course, is to just draw a trend line like this, right? Like this. You see? So when you sell it when price is below the trend line. Then you can sell, right? So over here, you wait till price action plays below. So I think people often see me do this on my charts, but they may not know why. I would draw something like that. And then I would say, this is actually supposed to represent candles. And then I'll say, I'll do that, right? If you check on my trading view charts, right? Sometimes I will do stuff like that. Well, now you know why, right? So only if price breaks below, then we sell. And this one has the possibility of doing a 1, 2, 3, 4, 5. That exists, because of this strong third wave. If you're familiar with Elliott third wave, that's important. Again, you have to wait for this. If you don't, this could be all, and then this one just continues all the way up to places like this. All very possible, right? So we need to wait for the confirmation, something like that, before you actually think of selling. And this one has that ability to get down to that level, right? So just because we see a strength, this is not the strength that you're looking for. You're looking for this to turn red, and then that is the strength. This is the strength that you want. You don't want this strength. This is what it's showing, but you don't want that strength. You want this strength. Okay, so yeah. So understanding the structure is important, and combine it with the trade suggestions. So that's the Aussie. We could look at Aussie yen. We could look at Aussie yen. Let me just put this to pound. We're gonna come back to it later. Aussie yen. Aussie yen they're all showing strength. So this week is all strength on the Aussie and on the Kiwi. They're all showing strength. Right? But at some point, this one, as it goes up, people need to take profit, and then that's when it's going to fall back down, right? So if you want to trade this at the upside, you got to realize that a turn is very possible. You see, you look at this Ichimoku cloud over here. It could very much, when it reaches its peak and people start to hop in, it could just pull back, right? And the market makers try to cash out. So you got to be very, very, very aware of that. Again, all the Aussies are showing strength to upside. So trying to sell is it means you're trying to pick a top. So if you're trying to pick a top, that means your top would have to be picked somewhere at the top right there. If you're looking for that, it may not go so far, but again, if you talk about picking tops, that's what it has to be. Something extreme, right? And this move actually is pretty far. Look at that, more than 400 pips. Right, 86 all the way to 90. So actually, that's a lot of pips. That's a lot of pips. But the reason I don't recommend the upside is because for me, I think that this move is easier to take. If let's say a trader is familiar, you're willing to take the buy, then you gotta go down to a lower time frame and be prepared to be stopped out. Yeah, be prepared to stop out. So you see all this moves. This is where you have to use your moving averages, because when it's doing an impulse, price is gonna stay above the moving averages like that. But at some point, one of these will just lose. That means you have to be stopped out. Like here, you see it just keeps going, and then it keeps going. So you are never really stopped out. You won't be stopped out. But at some point, when this one decides to turn back down, it could come here and go, but it could also just collapse. You see. So if you're trying to use a moving average style to trade these impulses, you have to be stopped out. Very important. Right. Retreating out to the upside now, it's an impulse going to the upside. You know, 1, 2. This is a third wave. So you got to use your moving average to try to trade these to the upside. But again, bear in mind, be careful of these moves. Like I said, it will collapse down. There's a big move down, and it can also do something like that, a bigger move like that, right? So you might be trying to trade all these little moves to the upside, right? All these moves are upside, you see, but a bigger move is going to be in play at some point. At some point. So if you try to trade this little moves to the upside, be aware that a bigger move can be in play soon. So if you ask me, I don't really like to trade this moving average trades, because I like the bigger swings, personally, if you ask me. Right. This one was possible. This did look nice, actually. This did look nice. This one over here. So over here, I would say from here, 1, 2, and I'm gonna put this up like so. To me, this move looked familiar to me. This one is a buy. This one is a buy. This is the kind of technique where traders who use moving averages, that's what they like to do. You know, it pulls back to a moving average, and then you look for price action, right? And then you try to take the buy. And so if you take that buy around here, you would, this is where you actually exit already. You're really exiting the trade right there. Okay. And today is Thursday, so I don't really want to take trades on Thursday or Friday. It's time to cash out the market actually. And next week I'll be looking for the sell if it happens, you know, or a bigger pullback and a buy. That's possible too. Right. So the buy was over here, people are already cashing out, right? But that's all Aussie yen. If Aussie yen happens to all switch off, for this switches to the sell next week, the week after, I'm looking for the sell. That's my bias right now. Okay. So let me see. Should I cover anything else? I think Those are the two quick trades and two ideas. What we can do to try to profit from the market. Maybe I'll just cover one last one. Let me see. Cover Dodge. So Dodge was pretty good too. I'll just show you very quickly. So you see moves like that where there's a bigger piece. This is what I'm talking about. So I want to cross-reference this back to the Aussie yen, right? So while or also Aussie yen or Kiwi yen, yeah, okay. So this moves. What if it does a bigger one like that? You see here. Can it do a 1, 2, 3, 4, 5? Can you do that? 1, 2, 3, 4, 5. So these bigger moves, if you get this and that, this would be a nice trade to take. All right. And yes, 5 wave moves are can can happen just as much as three wave moves. 1, 2, 3, 4, 5. See that? 5. So now let's come back to Dodge, right? So Dodge, you're looking for this move. Then when it pierced through and it broke this top, if you can get a pullback, that would be the best. Like a break of this structure, it pulls back into this area over here. Into this area over here. See this weak area over here. And then if you don't want to pick this area, let's say you don't want to pick this area. Right? You don't want to pick this area. Well, then your buy would be somewhere this one. Over there. Over here. And you're looking for that. Actually, to break this top actually. And the reason you're looking for that top is because of that actually. Where are we? Yeah, so around, let me see there. So outside the box over there. Actually, it would never break this low as well. This was actually the low. So everything up there is upside. Once price action has gone by that, you're looking for all the buys. Anything that tells you it could be a buy is a good idea. All right. Like so all these structures, boom, pull back, boom, pull back, boom. Over here is where we actually have to take profit already. So this trade up, this trade up here, this is the low hanging fruit. Out of the entire piece of stuff, this move is the low hanging fruit right there. It's like the churning, the push, and then the churn and up, then churning, boom. This was the low hanging fruit. All right. So after that low hanging fruit is done, which is this one, this was a low hanging fruit. Everything else becomes complex again, right? Complex because price going to need to shake people in the market. So how do we make this low hanging again? It's low hanging fruit if it repeats the same cycle where it goes up like that, and it pulls back again, like so, right? So it pulls back here. Then if you can, okay, so basically you want a structure down. You want this it could go up, but you want another bigger structure like this. Then this up down here. This makes it low hanging fruit, and then you're looking for another push up, just like this one. You made a push up, 1, 2, 3, like that, right? So you get a 1, 2, 3, a bigger one. This will become the low hanging fruit. So if that happens, dot should be going up to at least 35 cents. So that will make it a low hanging fruit. So look out for it. Dodge looks upside. All right. So looks upside, like so. Or outside the box, outside time box, you should look for the upside. All right, there's upside on this. What about this? Could it like come here, go up, come here, go up, and then come down? You know, it is possible. It is possible. So it is possible. But right now, you're looking for price action to complete the bias, which is to go up here at least, break this top. And then if it's wrong, you just have to be stopped out, right? Depending on how we actually take the trade. Yeah? Depending on how we actually take the trade. So you see price action says that it can go. So let's say price action happens to come down here like so. And then you, hold on, this is supposed to be up there. It breaks the trend. You take the buy. Let's say you took this buy. You can take it up to here and then that's it, right? Then see if it continues to run, right? Maybe this one actually is engulfing, maybe. Like so, maybe here. So you took this buy. You take it up to here, and then you see where it goes. Some people might even take it to the 270, like there. And then even if price say goes from here to there, well, you just being able to take some part out on the market in the right direction, that's good enough. Come back and trade another day. Because for those who think that it's gonna fly, well, yeah, but you could also pull back real sharp. Because even if you bought think it's gonna get there, yeah, okay, but look what happened first. So don't hesitate to just in swing trading, it's okay to take stuff out of the market because you never really know where it's gonna go once it hits certain levels, you know. Okay, so let's dodge. Oh, we must look at pound. Pound was nice. So right now, pound has actually pulled back to around here. So if you're able to try to trade this to the upside, that's perfect. But this is not a place to buy anymore because now today is Thursday. So Thursdays are a setup for traders. You know, this whole thing could be since last week has been a setup, and you don't want to be caught when this one dies real fast on the downside. So this is actually what you are looking for. All right. So taking a buy from here to there, yeah, that's fine. That's actually a good buy. You know, especially when this one engulfed, you see. And when trade suggestion, it would have showed pound dollar buy actually. Right. So if you had taken a buy up there, that's a good idea. But if this shows pound dollar buy, you cannot buy anymore. It's wrong. It's wrong because it's already hit the top here. It will not be a buy even though if trade suggestions say so. Right. What you want is for trade suggestion to say sell. So this trade suggestion has to be in line with the study of waves, basically, right? So you have to know that this has a potential of doing that. Then you sell this to the downside when trade suggestion says sell. Okay. So knowing when to look at this and knowing when to just forget about it and actually wait for it to reverse is very important. Yeah, very, very important. Let me see. Yeah. Okay. Okay, let's go look at one last one. It's very long. Let's go look at the DEX. Now, DEX is very interesting. So DEX has really made its move up to this level. We have Ichimoku cloud here, which shows you that this is the thickest part of cloud. So it's going to struggle right here. There's going to be some struggle right here. But what you want is for the DEX to get stronger. All right, I'm going to remove this. So what you want is the DEX to get stronger. And I put on a moving average. So if the DEX, right, could actually maintain itself, and if this is an impulse, right, what is the DEX going to do? It's going to stay above the 20, right? See, when there's an impulse, right, it stays below the 20. Impulse, it stays above the 20. So what you want is the DEX to get strong. And if the DEX is going to get strong, that will give me the pound dollar sell that I'm looking for, right? Right, and that means this wave structure, WXY, ABC, WXY, this is going to be one wave. ABC, this is going to be the correction, like so. Like so, like that, right? 1, 2, and then you want this to actually show strength to the upside, like so. And you see when this goes up, you can see how it respects the 20 period moving average, right? Like so. So I'm going to remove all this, all right? So know what we are looking for. Very important. And what you're looking for right now is for price action to do. I'll give you 5 seconds to do what? Yeah. Pull back to the 20 period moving average. Pull back to the 20 period moving average. Pull back to 20 period moving average. And then you want this to not break the 20 period moving average and price action to show you that it's a buy so that it can continue on its way. So if this can, the DEX can go up, which is what I want, then $1 will fall, Aussie dollar will fall, and that's what we're looking for next week. Okay, so look out for this. And with that, keep it nice, short, and clean. And thanks for watching. I hope this helps someone. And I'm out. Bye bye. I'm going to stop recording.